Broadcast. Welcome to the 37th, holy cow, 37th Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. I am Joe Nikruto. I'm here with
Dan Hussey, everybody. It's great to have you all on this particularly wonderful Friday afternoon.
Dan Hussey. Before we get started, on a somber note, I would ask that all of our viewers and listeners, please keep the Childress family in your prayers. Mark Childress, farmer from Hebron, Indiana, passed away on Tuesday, lost his life in a grain silo accident. On behalf, farmer from Hebron, Indiana, on behalf of all of us here at Zaner Ag Hedge, we'd like to offer our sincerest condolences to Mark and all of the Childress family, his wife, Katie, and his son, Alden. Very difficult time for them, and they could use your thoughts and prayers in this holiday season.
Yeah, the tragedy striking right before the holidays, and then at the end of harvest. It's just a reminder to the rest of us to stay safe, be mindful. Don't take that extra risk and make it home to your families at the end of the day. That's the goal. No one's life is worth. No amount of grain or money is worth someone's life in these instances. So. Our sincerest condolences to their family over the loss.
Amen to that, Dan. And also, before we get started, want to let you know that if you're interested in hearing about grain, market movement, and strategies daily, you can sign up for our Ag Hedge Hotline hosted by expert market strategist Ted Seifert, who I'm sure you see on RFT TV and Market to Market. Totally free, gives you a chance to connect with us personally if you have any specific questions about markets or agricultural commodities in general. If you're interested in learning more about how these prices work and how to make them work for you, it's a perfect way to take a first step and connect with us. Link in the description below to sign up for that. Totally free, zero commitment. We'd be thrilled to speak with you about the risk that you have and ways to mitigate it. A couple stories here today, Dan.
Yeah, we got a couple going on today. Let's see here. Sorry, Cargill lays off 5% of its workforce with job cuts impacting thousands of employees globally. Man, we don't like entering into the holiday season with that kind of news, but Cargill confirmed this week that it would be reducing its global workforce by about 5%. In a statement sent to the Associated Press on Tuesday, the food production company said that cuts were part of a long-term strategy to strengthen Cargill's positions, which includes realigning resources. Minnesota-based Cargill did not immediately provide further specifics around the layoffs, but a 2024 annual report from the company noted that it had more than 160,000 employees worldwide, meaning that the latest job cuts would be impacting around 8,000 workers, and at least 475 of which could be corporate layoffs. As privately held company, Cargill doesn't regularly publish its finances, and a 2024 report from the company, however, notes that it operates in 70 countries and sells to 125 markets, raking in some $160 billion in annual revenue. That's down from $177 billion in revenues seen the year prior. And I think it's worth noting that there are not many commodities or even food on your table that Cargill doesn't somehow touch in some way, shape, or form. Morton salt being one of those, major products, right? So. Interesting to see, but not surprising, I would say, in the commodity slump that we have seen in the last 2 years. That company is shuttering some of its business operations, but you never like to see job cuts ahead of the holiday season.
That is absolutely true. What a terrible time of the year for that. But and we have not seen too much of that, right? I mean, it seems like things are cruising along pretty well with the labor. You would think about the difficulty that a lot of producers are experiencing. You're not quite seeing that yet in a really big way in the folks that provide other products and services, I guess.
Absolutely. And you'd expect that type of, capitulation, even in the workforce and with an individual company like Cargill, to happen, I hate to say it, but at or near the lows of a market and price. So hopefully, right, this is just one of those instances you can put a pin on the chart and in the timeline and say, oh, yeah, look, they had to do something. And most of the time when those actions are taken, it usually marks a moment for price to determine something else. So not saying we're going higher, but I know that when we go over some of the numbers for the week and certainly where we close the day, it wasn't that bad of a close for the week, all things considered, but we'll see.
For sure. Prayers to and thoughts for those folks that are going to weather that adjustment, and hopefully they find ways to stay busy and keep their families floating while they work through that. So this next story, Dan, Biden administration will not finalize clean fuel tax credit guidance. I wasn't even going to read this because this story is no longer true.
Word on the street.
There's some interesting things here. Tax credit, the engine behind President Joe Biden's ambitious plan to generate 3 billion gallons in production of sustainable aviation fuel by 2030, was due to become effective January 1st, but a lack of detailed guidance from the U.S. Treasury would render the program dormant. Air travel contributes about 2.5% of global greenhouse gas emissions, making it a big target in the fight against climate change, right? Biofuel industry is now pushing lawmakers to extend existing blender tax credits that were set to expire at the end of the year to deal with the uncertainty, according to multiple interviews with industry executives. White House, which is overseeing a broad effort to finalize a list of unfinished climate rules, did not immediately respond to requests for comment. The delay in establishing guidelines for SAF is due to political squabbles between agricultural lobbyists and environmentalists over how to ensure the program can achieve its climate targets. One way would be for these people to get the hell out of the way. That's probably job one. Reuters has previously reported
bureaucracy at its finest, right?
Absolutely. Let's get the bureaucracy out of this. The Department of Agriculture is expected to issue some guidance on what climate smart farming techniques may be used to access the credit, but other key items such as life cycle analysis will remain unfinished and leave the industry without a blueprint to access the credits, sources said. However, as reported by Reuters, what was the fellow's name?
Looks like Jarrett Renshaw. And
Jarrett Renshaw says not true because the
retweeted by Karen.
Treasury issued guidance on the guidance today and said, yes, indeed, we will be issuing this guidance before, was it January 20th, Dan?
That is correct. They said,
so
expected before January 20th. And that's just a rather arbitrary date, right? Signaling that, hey, the Biden administration is not going to let this go unanswered before turning over the keys to the Trump administration is how I read that, right? Which is good, because over this last week, I know I got an uproar on social media about how the rug was pulled and they dropped the ball and fumbled it effectively on the, on the 1 yard line here, right? They already gave us, the Treasury Department and the IRS already gave us our first guidance as to how some of these things are going to be tracked there. Was it back in March? Or either way, earlier this year. And now we're looking for that final guidance for how the rubber hits the road and how those credits will make their way through the system and what those credits will be. That was the big thing that's been up in the air. And it's nice to hear that there is going to be some kind of resolution before the Trump administration takes office, where I know there is a little bit of friction as to what some of that the new administration opinions may have on some of these products and means. I will say that I think more education is needed for every decision maker out there about how good this can be for the U.S. economy, what it can mean for our producers, right? I'm for anything that creates the more domestic demand and less reliance on China as a customer for every farmer in this country. And I'm hoping this program can become that, right?
And so this
maybe
news
we'll get
story,
some guidance.
This bearish story kind of takes a turn today and takes the bearish luster off of what was, in my opinion, a pretty bearish story, right? Oh, we're not going to get to it. So you're in effect mothballing or putting on a shelf the whole idea, because if they're not going to issue that guidance, nothing's moving forward. Even though they're talking about, oh, they might issue some guidance. We've been waiting for the completion of this guidance for quite some time. What was it, March? We've been watching this for a very long time, and I thought, okay, here's another bearish spin on this, and the market has been under some pressure. But Dan, as we talk about this, as we get into this weekly review, the theme I think here for the prices of these commodities has been resilience. I mean, we're rather resilient price-wise in the face of what I would consider to be heavily bearish news. The Brazil and Argentina numbers. Just hanging in there, Dr. Cordonier, long-time crop watcher.
Right, those like you said, the production down there not going anywhere. Weather was looking dicey to start their growing season, but the rains have come, so to speak.
Now they're acting like they got it planted, harvested, put in a bin, and on a boat headed for China, which is certainly not the case.
Absolutely.
The resilience these markets, look at beans, for example. Jan beans opened the week at $9.89.5. The high was $9.99. low 977.5, which is key because the last trade was 993.75, up 4.5 on the week. Funds are short 87,000 contracts of beans. Somebody was asking me, weren't they short over 100 as recently as the last report? This could be showing that the funds are covering. We got to wait and see what the report says today, but could be showing that the funds are covering this short position, much like they did with corn. I've got a 10-day that's like, what is that, 987.75, Dan, 18 at 992.5, and a 50 at 1009.5. I mean, that is not a horrible look for a market that should be getting pummeled.
No, it isn't. And really, I apologize if we're having a little internet issue with this. It looks like mine stabilized again, but no. And there are other key things that I think we saw into the end of this week that give a little more hope here to what we saw in the developments. Increasing volume in the last 2-day rally and soybeans. It looks like in March corn as well.
We love to see that volume coming in with price movement, right? You got volume
getting
moving
above
in the
that
direction of price.
Getting above that 18-day moving average to close the day there for I believe March didn't quite do it, but Jan beans did get above their 18-day. We haven't made it above that high of the week, which would have been like, the icing in the cake, I think, or the cherry on top of the Sunday to do it. But like you said, resiliency is the only word that I can think of. I mean, it's almost shocking because as a technician, you look at that, I think it counted like 16 times we've tested contract low, that 980, 975 figure in beans since August. I mean, that is, somebody somewhere cares about the market staying above that figure. And it's impossible to ignore. I've been chatting with clients all week. I'm hard pressed to say I'm bullish or bearish beans while we're chopping like this at lows. It's hard for me to get very bullish on that type of price action, but I can't ignore the fact that they're not letting the powers that be, the market gods, are not pushing this market below those figures. And we're still also not getting above that $10 handle. However, we certainly closed the week with, I think, a little bit of a more bullish undertone. Positive news, we've had pretty good exports. This market could get interesting next week if that buy-side volume continues. We get through the highs of this week. There's not much in the way of resistance I see on the chart until back towards the 1015, 1020 area for Jan beans, where that 55-day average comes in at 1013.75, the 100-day up there at 1019 and 3/8 or so. And we really are just trading that range back up that we've otherwise been in since August. So support is there until it's not. No matter what we feel, hope, and dream about this market, you can't ignore the figures that are printing.
Some anecdotal evidence too. I'm not naming no names, but acquaintance, good friend says maybe this meal and oil flying off shelves at a large processor, and they're having a hard time keeping up. And so that to me is a very interesting thing in what should be an overall bearish environment, and questions about who is consuming what. And I don't know. You know what I also noticed, Dan, a couple numbers here for this WASD, and I believe the WASD is on Tuesday.
I believe so.
11 a.m. Central Standard Time.
December WASD always sneaks up on me, and I almost forget about it until right the day before.
You got to decide what you're going to have for lunch. Shout out to Katie. U.S. carryout number for U.S. bean carryout number 469 was the trade estimate versus USDA November at 470. Brazil crop 169.3 versus USDA at 169 in November. Argentina 51.3 trade estimate versus USDA's 51. World bean ending stocks 132.4 million metric tons versus the USDA's NOV 131.7. Beans still holding in there. You got to say that was my note that I wrote to myself, so I didn't forget. Still holding in there. Why not trading to new lows? News is bearish, but the market is not collapsing yet. I'm bearish. Like, we're all bearish, right? Everybody's bearish. Everybody that knows the fundamentals says beans are going lower, but they're not. And so I don't know. How about corn for March? Opened the week at 433. The high was 440.5, low 428.5. That's important again because the last trade was 440. That was up 7 on the week. Funds long about 104,000 contracts of corn, rather stable long position. They're right in and around that 100, right? Flip flopping. 10-day 432.5, 18 434.5, 50 433.5. 100 at 427.75, all of the spaghetti underneath that closing price, that 440, except the 200 bar at 451 and 3/4. Do we even do people? How old do you have to be to reference the 200 bar moving average in commodities? Right, you got to be like 75 years old. 200 bar, but at 451, if we can get, I mean, it would seem to me that 440 close is rather positive. Am I too optimistic?
No, I mean, you've got kind of a tale of a few trend lines against the highs. One that dates back all the way to May of this year. Draw that down through the highs of the last, basically, of November. We busted through that level today and looked like this sideways wedge-like structure in corn is resolving to the upside. We saw increasing volume the last few days. You saw decreasing volume in this last slide. Basically, the last time we were at 440 and slid down to 425, we had decreasing volume as we were trying to push below that 100-day moving average and couldn't, and really held it as support. There's also an upward sloping trend line against the lows from August. Pair that with the low in October, the low in November, tag that at 424 and 3/4. We've basically based against that. And now the last 2 days of price action, we have that big increase in volume. Now 206,000 contracts traded today compared to, what was it yesterday? Somewhere around the 170 figure. So big outside day from yesterday, got follow through today, breaking above that 18-day, breaking above a downward sloping trend line. It definitely looks like a market that has started a rally back towards the high end of its range, which, hey, conservatively 447 is where that is, from the highs of November there, and 452, the high of October, the 200-day of 451. I think there's a target for this market to be shooting for above.
I would agree. Carry out, WASD numbers, U.S. carry out, the trade estimate is 1906 versus the USDA's 1938. Brazil crop 127.10 versus the USDA's November 127. Argentina 50.8 million metric tons versus the USDA's November 51. World ending stocks coming down just a smidge, 303.50 million metric tons versus 304.10, 304.1. So they're going to have to increase exports, right? On Tuesdays, we would guess. They did not last time, and everybody said sooner or later they're going to have to decrease exports. They're going to decrease. Sooner they're going to increase exports. We're moving corn. We're moving corn out of this country pretty well. Mexico, Japan. I think I saw some to. I think was it beans to Spain today or corn to Spain? I can't remember, but we're moving corn pretty well. That's going to lower that carryout number, right? So that would be interesting to see what happens with those exports versus the carryout number. I can't think of any surprises, and I was thinking about that with beans, and I didn't really want to say out loud. So Dan, what's the surprise? But I don't know what the WASD surprise is for December.
Yeah.
If it's even possible.
You never know. You never know. Government folks doing government work with government pencils and erasers will do, right? But yeah, it's hard pressed to think there's going to be anything wildly, upsetting within the U.S. balance sheets. Man, I still think we can all talk about the global ones and certainly some of the Brazilian numbers, but the way exports have been running, you've got to imagine they've got to move the needle there. And if they don't, you got to ask yourselves, well, if we're this far, ahead of schedule on certain places, or comparatively over the last month, right, from where we were in November, and I don't know, maybe people have checked out. I will give the benefit of the doubt that we're going to be having a changing, of tides and administrations here. Is this the 5 o'clock on a Friday USDA in December that we'll get? I don't know. You know what I mean? And not to literally mean like I know the report's on Tuesday, but an analogy to any workforce at 5 o'clock on a Friday is probably a little checked out and done for the year, so to speak. But we'll see.
Which is totally fine. But we would be remiss if we didn't remind producers,
absolutely,
especially folks that are holding hundreds of thousands of bushels of corn. If we do continue to rally, we should continue to reward this. It's very easy, without speaking about particular producers or particular risk situations. Generally speaking, if you want to make a sale or you feel like, and I know we would hear the phrase courage calls, right? But But in this case, if you want to reown this on paper, you can let them have the corn, turn that into cash, get that money into your bank account, and be long. You could be long all the way out to March for not a tremendous amount of money. 440 calls. I think we're back up near like 13 or 14 today. Dan,
I would also be hard pressed to call these pure courage calls, right? Because we have been looking at the charts and found indication of reasons why the market has turned, right? We're not just picking a bottom here and buying because price is low. I want everyone to realize the thought process here going on with us, right?
That chart has certainly already bottomed. If you didn't know that was an agricultural product, you'd want to be long whatever that is on that chart with both hands, right? I mean, that is a very positive looking chart. Not to say that, not to say that we're predicting the future or we're speaking to anybody's individual risk situation, but if you are looking to get some coverage, you are looking to get some insurance and make it easier to turn corn that you have in the bin into cash that you can put into your bank account. That's a very, very simple reownership strategy. And the only real risk on that strategy is the money. The way these long options work, Dan, correct me if I'm wrong, you pay money for the premium, you pay money for commission, and that is the extent of your risk. That's the beauty of using calls to get overhead protection, is that your risk is quantified. You do not wake up with more risk than you went to sleep with. Am I right?
Absolutely right. It's finite. It's known, and it can be discussed ahead of time so that expectations are not unmet.
Absolutely. March wheat opened the week 548. High was 560 and a half. Low was 540 and a half. Last trade 557 and a quarter. Up 9 and a quarter on the week. When I looked at this chart, I thought I had to do this twice and say, did I do this right? Can you up 9 and a quarter for the week in wheat? Funds still short 54,000 contracts. 10-day moving average at 50.
And to be fair, until yesterday, right, we had gone nowhere on the week. Wheat was the only thing we could talk about for wheat was a new contract low.
But this 553 and a quarter moving average, and more importantly, in my opinion, the 557 and a quarter, we closed right on that, right on the 18-day, which is not a terrible look. Some folks want to use a 20. If there's a 20-day number that corresponds and makes that different, let me know. You're 50 and 100. I mean, this is not for wheat being up 9 and a quarter on the week. That's not a bad deal.
And just to play devil's advocate, right? We close right back at that 18-day moving average. I mean, we're putting pressure on resistance here, right? That's not what we were doing just 2 days ago, making a contract low, right? We're also against putting pressure on the trend line that has basically defined the sell-off in wheat since October. So
devil's advocate would say you need a close. You want to say we need a close over those numbers to kind of get bulled up, right? I mean, you would be early.
But wheat's also the type of thing where you're going to come in Monday if it wants to go through those, right, and be up 30 cents, and you're like, right, we all have been lulled to sleep. But not saying that that's going to happen. But with the price action we saw in corn, the slightly positive developments now for soybeans getting above some levels, man, a new contract low and what has been a 20-cent move off of that low here to finish this week. Not a bad way to go out there, wheat.
Not bad at all. On the other side of the coin, Jan feeders opened the week at 259.57 and a half. High was 261.20. Low was 254.55. Last trade 255.82 and a half. Down 365. Outside week down. Correct?
That's correct. For the week, right? We have an 18-day not too far below us at 253 in that Jan feeder. 200-day, which hasn't had much time for the January feeders to get there, but it seems like it's around 250. I'm pointing those levels out just because, hey, it looks like we are in a little bit of a pullback. That after a very nice run up, Jan feeders broke out of that 250 area, the 248 highs. It looked like consolidation there until it wasn't. Had a nice run up, and now it seems like they've been unable to sustain the rally to take them all the way back to contract highs and all-time highs for the time being. I'm not saying it won't get there, but it doesn't happen in a straight line. And I think some of the lack of follow through we saw from those fat cattle, basically both markets making their way up to the summertime highs and being unable to push through those levels, might be a reason we're seeing a little bit of a softer trade now here coming off that resistance.
screwworm story from Mexico may be running its course.
Doesn't help, right? Yeah, absolutely.
Fats opened the week, and I think I'm looking at Feb fat cattle now instead of Dees, right? Opened at 188.62 and a half. High was 189.57 and a half. Last trade 186 even. I'm sorry, low was 186 even. Last
186
trade,
even, yeah.
Low was
High of
187,
even. Low of 186. There you go.
I had 189.57 as the high for the week. For the week, not for the day.
For the week.
Last trade was 186.17 and a half. That's also down double digits, 245 on the day. So, I'm sorry, on the week. So cattle may be beginning the pullback to test the rally that we've seen from this closing of the Mexican shutting off the supply of Mexican animals into the U.S. For the time. Certainly, these are now, we've been beating this drum for a long time, certainly very attractive prices. I'm not sure how this story plays out. We get a lot of animals from Mexico, right? And whether or not this story has any staying power, if we're going to continue to see imports from Mexico restricted, but we're beginning to turn. This is the beginning of a pullback, no doubt about it.
And I always caution, I haven't looked too far into the details of the Mexican news that has come out, but let's, I also want to kind of give, I guess, an air of caution and play devil's advocate there too. Remember when they banned U.S. GMO corn? Well, yeah, it was only for human consumption, and that only applies to white corn, and none of that's really applies. So, there's a lot of grandstanding and saber rattling going on ahead of the Trump administration coming into the White House. There's fears out of Europe too for other reasons too, and people have been talking about the fears of tariffs. And heck, even Justin Trudeau from Canada has already met with President Trump, trying to, I think, lay the rails for an easy transition to new trade policy. That's all fine and good. But the thing about fat cattle I want to leave everybody with was that since the middle of November, when feeders broke out of their really every technical level they were being suppressed by and ran back up to those summertime highs, the fats went all of nowhere, right? Fat cattle was only able to move from the 184, 85 area back to the 190 area, which didn't even take out their swing or their highs from October, and ultimately fell back down. So that lack of confirmation within the cattle complex to follow the feeders through there was also a bit of a canary in the coal mine over the last few weeks. And again, fats aren't going to follow the feeders, even though the feeders lead. I don't think you're going to see that much of spread trade continue, right, without some kind of movement in the entire cattle complex. It was really a massive spread unwind, or maybe position build between the feeders and the fats as margins for on feed were certainly taken into question there.
Just like we say with corn, it was a long harvest. Guys did a lot of work. They went back out into the fields to get ready for next year. Certainly take a break, but don't be sleeping. Don't be sleeping on this price action. There are opportunities here, I think.
Still are, right? Right. If prices are still good, you haven't missed the boat yet. If there's, if there's need to get business done.
Question of the week. Carter's got a question for us. What is your favorite mobile app or game? Dan, I'm 55 years old. I don't even know what he's talking about. So I know you're
maybe not a TikTok influencer, Joe.
I don't even know what he's talking about. Mobile apps or games. My phone
I would say Joe's
is
probably the Find My iPhone app.
Yeah. No, it's around here somewhere. Yeah, that's probably right. Yeah. Absolutely.
Yeah, in another life, I used to be into some online video games. I was a kind of a big player of EVE Online for years, I guess, if you want to give me my favorite video game. I was a space and warlord there. But yeah, no, my favorite app on my phone, certainly since having kids, is the timer. Boy, that thing has come in handy as I've graduated from being graduated into being a dad.
That makes very good sense. What do you have to keep track of time for. You
But
got
jokes,
them in
but
there.
actually, jokes aside, while we're on the topic of apps, we're going to be launching and talking about Farm Journal a little bit, or Farmer's Ledger, actually, as we are talking about it, which is a cool app that we're developing over here at Zaner. I was just talking with the guys working on it yesterday, and we're doing some tests with some other producers on it now. Which, hey, the ability to take your production and take your operation and all of that financial wherewithal that you've been putting into an Excel sheet and have an app to do it right on your phone and on the computer is something we're trying to work on to give to producers, because we're
Or
finding
writing
that,
in a
wow,
notebook.
right, yeah, right. We're finding that that type of information is obviously integral to the operation, but it isn't always standardized to how we're collecting it. And hey, for guys like you and me, I know I'm preaching to the choir. Those are necessary tools that we can use to help, right, produce a marketing plan that actually addresses your risk and what we're looking at in terms of your production. But more importantly, it's also a tool that we're hoping farmers can use to bring to ag lenders, to bring to the bank, to get better conditional terms on some of those financing packages. So yeah, if there's anyone out there that's interested in such a thing, reach out to us. You know where to get a hold of us over here at Zaner Ag Hedge, because we'd love to have a discussion of how maybe that is something that works for you, or give us a call about your marketing plan as well. So thanks for listening.
Doesn't take any imagination to think when you walk into the banker, if you have the answers to all of the questions they're going to ask you right on your phone, that you are going to find yourself with better terms than you would if you did not have answers to those questions. Especially,
so keep an ear to the rail.
Under these conditions, right? I mean, absolutely. Right? Strangely enough, those are my favorite apps. These new Zaner apps, those are my favorite. I don't know about you, but I love them.
Coincidence. Yeah.
And anybody that wants to take a look, right? And you were just getting ready to say, cut me off. Anybody that wants to take a look, we can set that up. If you would like to walk through it, or you'd like to demo it, we would be more than happy. We would actually appreciate folks that would like to demo it. Let us know, give us a call, shoot us an email, and we'll get you set up on that right away.
Yeah, and anytime information and personal information is used, I have to press to say, because I'm concerned about it all the time, we're not selling information. We're not collecting your information for this.
No
other
social
than
security numbers. It's not like, absolutely.
Well, right, or even the production, your production information, right? We have no interest in selling that on. This is truly a tool that helps not only us as marketing professionals do the job better for you, but also hopefully it's just a tool for an improvement and improvement on our everyday needs, right?
Absolutely. Dan, take us out of here.
Yeah, thanks for listening to us, everybody. If you need more information about the Farmers Ledger app, you want to talk to us about your marketing plan, you can't get enough of us, follow us on Facebook at Zaner Ag Hedge, or on Twitter and LinkedIn at the Zaner Group. If you have any questions you want on the show, you want to check out the app, you want to just talk to us about marketing, there's a link for you to do that in the description below. You can also, give us a call over here at Zaner, and we appreciate your time. And thank you again. Be sure to like, comment, and follow the podcast and not miss a beat. We will be back with you next week as price action develops.
Godspeed, Mark Childress, and God bless the Childress family.